Hi, I'm Mike for Path and Post Real Estate. It's January, and this is your real estate market outlook for 2023. Big headlines to start us off. The National Association of Realtors just named the Atlanta real estate market as the #1 market to watch in 2023. This is an annual top 10 list, and the Atlanta, Sandy Springs, Marietta area is expected to outperform all other metros this year. Specifically, the cities of Marietta, Woodstock, Canton, Roswell, Alpharetta, Jasper, Kennesaw, Ball Ground, and Hackworth all present fantastic cost of living compared to other parts of the country. And how's the local market doing right now? The market action index is down from 49 to 41 over the last 3 months. Though sales have slowed a little, a market action index of 30 would actually be a balanced market. So the current index of 41 signifies that we're now in a slight seller's market, as opposed to a rather heavy seller's market that we've been accustomed to for the last couple of years. While sellers should expect less offers, more negotiations, and concessions moving forward, buyers, you're still going to need to put your best foot forward to win the best listings. Local real estate prices did peak in the summer of 2022, and they've since seen a slight decline. There are a few more homes listed for sale now, though supply does remain low compared to pre-pandemic markets, and rising mortgage interest rates have tempered buyer demand. When you look at the home price predictions from some of the biggest names in the industry, it's clear that nobody has the crystal ball, but nobody's predicting huge swings either, and it looks like home prices will hold pretty steady for 2023. Mortgage rates. That is the big topic these days, as this is the major reason that buyer demand has been slowing. While we don't know what mortgage rates are going to do, I have a couple tips for you. The first tip is that the Fed funds rate has very little to do with mortgage rates. Mortgage rates follow inflation more closely than anything else, and rates will likely drop as inflation slows. And we've already seen that start to happen over the past 2 months. So the next time you see the Fed raise the Fed funds rate, the overnight lending rate, don't let that alarm you. It's really not directly connected to mortgage rates at all. The second tip is that rates are short term. Homeownership, long term. If rates drop, they can do it quickly, and you can refinance into a lower rate when that happens. However, when you buy a home, that's a long-term investment. And if you look back at any 10-year period since 1940, when we started tracking this data, if you bought a home, it was worth more than you paid for it 10 years later. And that includes the Great Recession of 2008 and 2009. So, should you buy or sell? The answer is pretty easy. It depends. Every decision to buy or sell is unique and based on several factors: your financial situation, the length of time at your current and next home, what you gain or lose in the process, and most importantly, the life transition that is prompting you to consider making a move. If you have any questions or would like a helping hand with your next transition, head over to pathpost.com to find your path forward.